Hey everyone, and welcome. Today we're going to tackle a massive topic, the stock market. And my goal here is to show you exactly how anyone, and I really do mean anyone, can start with something as small as $100 and begin to build real long-term wealth. All right, let's get into it.
Just let that sink in for a second. We're all taught to save money, right? To tuck it away where it's safe. But what if I told you that safety is actually an illusion? What if, while you think you're doing the responsible thing, your money is secretly losing its power?
Now, before we go any further, just a quick but super important heads up. Everything we're about to cover is for educational purposes. My goal is to empower you with knowledge, but this isn't official financial advice. You should always do your own research before making any investment decisions. Okay? Cool.
So here's our game plan. First, we'll uncover that hidden problem all savers face. Then, we're going to demystify what owning a stock really means. After that, we'll get into the magic of time, talk about how to handle the inevitable ups and downs, and finally, I'll give you a clear, simple path to get started.
All right, let's kick things off with that big problem I just hinted at. This is the core reason why just letting your money sit in a savings account, well, it's just not going to cut it anymore if you want to build wealth.
Okay, so look at this. This slide lays it all out perfectly. On one side, you've got your savings account, which might give you, 1% interest, if you're lucky. But on the other side, you've got this invisible force called inflation. That's just the cost of everything going up, and it's usually chugging along at 2, 3, maybe even 4%. You see the problem here, right? The math just doesn't work. You're losing.
And this right here is the heart of the problem. Yeah, the number in your bank account might creep up a little bit each year, but what you can actually buy with that money, your purchasing power, is slowly shrinking. It's like you're on a financial treadmill, running hard just to stay in the same place.
So, if saving isn't the answer, then what is? Well, this brings us to the stock market. And look, I want you to forget all the complicated charts and the guys yelling on TV for a second. Because at its core, it's about one super simple, super powerful idea.
And that idea, it's ownership. When you buy a stock, you're not just buying some random ticker symbol on a screen. You are literally becoming a part owner of a real, living, breathing business. A tiny piece of Apple or Google or whatever company you love and believe in. You get to share in their success.
So how does that little piece you own actually go up in value? Well, it's not magic. It's tied directly to the real world. When that company sells more products, when it becomes more profitable, when it expands into new areas, the entire business becomes more valuable. And since you own a piece of it, your share becomes more valuable too. Simple as that.
Okay, so ownership is piece one of the puzzle, but it's only half the story. The other half, well, this is the secret sauce. This is the engine that turns small, consistent investments into life-changing wealth over time. And it's called compounding.
Compounding is basically your money making money, which then makes more money. The returns you earned start earning their own returns. Honestly, the best way to picture it is a small snowball at the top of a really, really long snowy hill. Let's break it down with some simple math. You invest $1,000 and get a 10% return. After year one, you've got $1,100. Easy, right? But in year two, you don't earn 10% on your original $1,000. You earn it on the new total of $1,100. So you make an extra $10. I know. It doesn't sound like much at first.
But this is where the magic really kicks in. Take a look at this chart. See how in the first few years, the growth is kind of meh? It's pretty slow. But then you hit year 10, year 20, and especially year 30, and that snowball just takes off. It becomes an avalanche of growth. It's exponential. This is how real wealth is built.
So what's the big takeaway here? It's that time. Time is your single biggest advantage. More than money, more than anything. Look at this. You have person A who starts investing early, even if it's just a little bit. Then person B waits 10 years, but tries to make up for it by investing more money. Guess who almost always wins? Person A, the early bird. That single decade of waiting can literally cost you hundreds of thousands of dollars. It's crazy.
Okay, so this all sounds great, right? But I know what you're thinking. What about the risk? What about the market crashes I see on the news? That is probably the #1 fear for anyone starting out, so let's tackle it head on.
First thing you absolutely have to understand is this. The stock market does not go up in a perfect straight line. It just doesn't. You're going to have amazing years, and you're going to have some really rough years. Those ups and downs, we call it volatility, that's not a bug, it's a feature. It's a totally normal, expected part of the journey.
But here is the most important part. This timeline tells the whole story. Whether it was the dot-com bubble in 2000, the huge financial crisis in 2008, or that crazy sharp drop in 2020, what happened every single time? The market recovered. It always has, and it has always gone on to reach even higher highs. The long-term trend is undeniable.
So what does that tell us? It tells us that the biggest threat to your long-term success isn't the market crashing, it's you. The biggest mistakes happen when we let fear take over and we sell everything when prices are low, or we let greed take over and pile in when everyone's euphoric. Controlling your own behavior is way more important than what the market is doing on any given day.
All right, so how do we actually do this? How do you get started on your own path to wealth without feeling totally overwhelmed? Let's build a dead simple plan that anyone can follow.
Okay, strategy number 1, and this is the absolute best starting point for 99% of beginners, ETFs. Think about it. Trying to pick the one winning stock out of thousands of companies? It's like trying to find a needle in a haystack. Well, an ETF basically says, forget the needle, just buy the whole haystack. With one click, you can own a small piece of hundreds or even thousands of different companies. Instantly, you're diversified, and your risk goes way, way down. Part 2 of our strategy is something called dollar cost averaging. It sounds complicated, right? It's not. It's the simplest thing in the world. It just means you invest the same amount of money on the same schedule, say $100 on the first of every month, no matter what. This takes all the guesswork and emotion out of it. When the market is down, your $100 buys more shares. When it's up, it buys fewer. You're just consistently building, month after month.
So let's put it all together. Here is your super simple 4-step plan. Number 1, start small. Seriously, $50 is enough to begin. Just start. 2, invest monthly. Make it automatic. Consistency is everything. 3, choose a broad ETF, something simple that tracks the whole market. And 4, the big one, think long-term. We're talking decades here, not days. This is a marathon, not a sprint.
And I really want to leave you with this one thought, because if you remember nothing else from this, remember this. The barrier to getting started isn't a lack of money. It's just starting. The simple act of beginning is what separates people who build wealth from those who only watch from the sidelines.
Look, the journey to building real wealth begins with a single step, and you now have the map to get there. If this breakdown helped you, just imagine what else you could learn. If you're serious about learning how to grow your money step by step, make sure you hit that subscribe button. The sooner you start this journey, the more time you have to let that snowball grow. You've got this. Thanks for hanging out with me today.